Hello, it's Wednesday the 23rd, I'm FX Plu, and summer's back. Fun fact for you, 5 years ago the polls were opening for the Brexit referendum. Doesn't time fly when you're having fun? Today the UK economy continues to rebound from the pandemic, vaccines continue to roll out to younger age group, and the precautionary delay to the full reopening has had very little effect. British factories are seeing the strongest manufacturing growth in 40 years. Yes, supply chain shortages may be contributing to inflationary pressure, currently tipped to drive inflation up close to 4%, but the effect from this sector will be limited, as it only accounts for 20% of UK economic output. The 80% from services output remains solid, if not spectacular. As the UK continues to deal with the Brexit effect, though, Boris is tipping the UK to be at the forefront of innovation and scientific advances going forwards. Rule Britannia. But we have furlough to deal with before any of that good stuff. Q3 will see businesses need to adapt ahead of the staffing support ending, so at best we may see a reality check, at worst it may be a case of adapt or die. But ahead of this, employment market remains pretty strong, with many businesses still reporting difficulty in hiring. The MPC meeting this week will be the last for Chief Economist Andrew Haldane. His replacement, an experienced City veteran called Catherine Mann, will be formally introduced. And ahead of all that, ever hopeful that we'll follow the Fed starting the conversation about tapering support, sterling climbed to 139.65 against the dollar yesterday. Chances are, with the hurdles ahead, though, as furlough ends, any tapering is still some way away. So Powell's been on in a US Senate testimony. He acknowledged that the economy is rebounding well, and he's balancing between early stage recovery and rising inflation, which he still believes will be transitory. The Fed has been surprised by the pace of inflation, but they expect it to pull back just as quickly once supply chains even out and that gap between supply and demand falls back to normal. He doesn't believe, good morning, that the virus has been defeated and it still therefore presents a risk. However, the widespread vaccine availability and the higher than expected take-up, added to all those trillions of dollars of stimulus, has had a positive effect that the Fed was expecting. The dollar index pulled back to about 91.65 and euro dollar rose to 119.55 as the market may be positioning itself ahead of a little hope of positivity from the Bank of England. Right, that's it from me. Have a wonderful day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue. Yeah.